Hi, this is Alessio Rastani of Leading Trader. Hope you're well. More bad news for the mother of all bubbles, what I call the property bubble or the real estate bubble. And of course, in particular, we're talking about the London property bubble, which of course is on the brink of collapse. In fact, I'm going to show you exactly what this chart here is showing to us. A massive slaughtering of the share price of most real estate firms in London. In fact, I'm going to show you what this chart here is telling us here as well. So this by no means is a surprise to us. We've been talking about this now for some time. In fact, you may remember from a video that I posted just recently, about 3 weeks ago, and has had quite a number of views so far on YouTube. So I gave you an update about the crash in the mother of all bubbles, which of course is the London property bubble. And of course, it's not just London, it is of course other cities around the world as well. For example, Toronto, Stockholm, Munich, Vancouver, Sydney, and so on and so on. This research was done by UBS about a year ago, and it's certainly coming true as we're seeing this bubble about to burst. In fact, I'm going to show you in this video, in my last video that I published, you may remember I talked about the fact that just about in 2007, about more than just more than 10 years ago, the peak of house prices in London before the major crash we had was about 300,000. Okay, that's what the prices were at the peak of 2007. Where are they now? Well, we know exactly where we are right now, as you'll see from this chart. So you'll see that right now, in fact, just in 2017, the peak was nearly at £500,000. In other words, just £500,000, which in US dollars is about $750,000. Now, the fact is that a lot of what's been driving, as I mentioned in my previous video, a lot of what's been driving house prices higher from the 2007 peak, or I should say the 2009 low, all right, the driving force behind this was, of course, foreign investors. It wasn't just domestic buyers. No, a lot of this was done by foreign buyers, foreign investors. A lot of the wealthy, big money investors from Russia, from the Middle East, pouring their money into the UK housing market, into the London property market as a source of stability. But of course, that stability has now evaporated. And I'm sure you probably know why it's evaporated. The article from The Telegraph just recently, it says over here, negative equity time bomb for banks as baby boomers cash in housing wealth. So what's been happening is not only are the baby boomers cashing in their housing wealth, but also, we also know this, whether you are pro-Brexit or against Brexit, doesn't matter if you're pro or against, it is without a doubt that the Brexit referendum and the talks about the UK leaving the European Union has brought a lot of uncertainty. Okay, it doesn't matter which side of the equation you're on, whether you support Brexit or you don't support it. You have to admit this, that there's tremendous uncertainty. I mean, this whole thing is becoming a mess. Nobody knows what's going on here in the UK. And don't get me wrong here, guys. I love the UK. I love London. But it is undoubtable that nobody knows what's going on with Brexit. Nobody knows what kind of deal is the UK going to get. Is it going to be a hard Brexit? Or is it going to be a soft Brexit? And I'll have a separate video on that very soon. I'll give you my prediction on that. But the bottom line is, whether it's soft or hard Brexit, whether it's deal or no deal, nobody knows really what's going to happen. And guess what? Because nobody knows what's going on, investors are not going to sit around and wait. Foreign investors are leaving the UK market. They are dumping their holdings and investments and moving elsewhere. And who can blame them? For example, take a look at the share price of Foxtons. Foxtons is one of the major real estate firms in the UK. Look at their share price just in the last few months. Look at this. I mean, this is slaughter. Without a doubt. I mean, look at it. It's just completely bleeding share price going down from here. And it was at the 80s. It was in the 80s back in April. It's now under the 50 level mark. It's in the wave 3 being one of the most powerful waves in market movements. And it's not just Foxtons, in case you're interested. It is, of course, also happening on other stock prices. For example, Savills. Savills is also one of the key real estate firms here in the UK. Investors are not interested. They're leaving. As you can see, the stock prices are falling. And of course, it's not just Savills. Also, if you just take a look at some of the developers, for example, house builders like Taylor Wimpey. Taylor Wimpey, of course, one of the major developers and house builders here in the UK. Their prices are falling too. So what seems to be happening is, across the board in the UK, is that real estate is being dumped by investors. Uncertainty about Brexit. Nobody knows what's going on with the whole Brexit situation. That's number one. And of course, here's the thing. In case you're thinking, well, does it matter the stock prices are falling? Yes, it does. Because put it this way, if you are one of the major investors, if you are the big firms, the big money, like Goldman Sachs, like, for example, JP Morgan Chase, why would you be selling the shares of real estate firms unless you knew or you suspected, according to your calculations, that these firms, that real estate firms are not going to make a profit? I mean, you would not be selling the shares of a real estate firm unless you suspected that these companies are not going to be profitable probably in the next couple of years. And why would they not be profitable? Because house prices are overvalued in London. They're significantly above the 2007 peaks. And of course, as the research has shown, they're extremely overvalued. They're in bubble territory and they're in need of a correction. A correction must happen. There needs to be some adjustment in the price before, of course, the investors get interested again. So as you can see, there's hardly been any much of a correction. There's been a drop, sure, there's been a drop, but I think it's early days. In fact, let me show you. According to my own calculation here, I think what we're seeing here is a reversion to the mean. By the way, I published a video on this if you want to go ahead and watch it. It's a video I published some months ago, but essentially what we're seeing here is what's called a reversion back to the averages, a reversion back to the mean. In case you're not familiar with this particular term, whenever a price moves in a certain direction, what usually happens is the price eventually comes back like an elastic band. When it gets stretched out, it comes back to its average, to its mean. And that's what seems to be happening here. We're seeing this reversion back to the mean, back to the averages, and I think it could potentially go much lower. In fact, according to one economist from the London School of Economics, they're now predicting about a 40% drop in house prices in London, although I'm not as pessimistic as they are. I think it's probably much more likely we'll see a more modest drop in London house prices. So I've shown you here on this chart what I think is going to happen. I think if we see more slide, any more downward movement in London house prices, I think by maybe 2019, we could see a drop back down to this particular, well, below the green reversion to the mean line. That's the mean level. And I think we could see it back down to this trend line here that you see on that blue arrow shown here. That would bring it down to the 425, 420 range. On average prices. And of course, on a worst case scenario, it's possible it might go below that level, it might go below the trend line, maybe down to the 400 to the 390, 380 level. That, of course, is a much more significant drop. But again, that is not as pessimistic or as bad as some of the economists in London are predicting. Some economists, again, are predicting about a 40% drop from the peak of 2017. Again, a 40% drop, you're talking about a drop back down probably back to the 2007 highs. I mean, that's a massive drop. And I'm not expecting something as big as that, although that would be nice, right? If you're an investor, if you're a long-term investor, then certainly you would want something like that. But I'm not as convinced by that as some economists are. So for me, I personally am happy about the fact that prices are dropping, because again, if you're a long-term investor, certainly you'd want to wait until prices drop and have a correction before you start buying. And that, of course, is what's called buying when there's blood running in the streets. When everyone is afraid, when everyone is convinced that prices are going to continue falling lower, that is actually probably the best opportunity, in fact, to be able to negotiate with sellers for a much better deal. Because guess what, guys? If prices continue to drop, even back down to the averages or back down to these levels, right? Guess what? You're much more likely to be able to negotiate with a seller and convince them that prices are going to continue dropping further.